Okay, fantastic. So welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. And today, of course, we will be going through the non-farm payroll post moves. We'll be going through also the decision from OPEC, which has created a trade opportunity. And we'll also be covering live market analysis. We'll go through a watch list of trade ideas, a forecast of where we expect gold, silver, crude oil, and the commodity currencies to be heading next. We'll be answering questions and, of course, providing live support as well. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For further information on our services, please do go to www.jointhelivetradingroom.com. And with that, I will also put the link in the session at the end, where you can also go across to our YouTube channel if you'd like to get kept updated with the latest commodity reports. There will be another commodity report coming out tomorrow. Okay, so with that, what we'll do, guys, we'll get into it and we'll go through our favorite trade ideas right now and really what we're looking at in the markets at the moment, following on from the non-farm payroll decision and also the OPEC announcement as well. So there are some trade opportunities which have come as a result of that. So it's good timing for today's session. Okay, so with that, I'm just going to share my screen with you and you should be able to see that very shortly. Okay, good. Just a quick check-in. Everyone can hear me okay? Yeah, fantastic. Thanks very much, Sharice. Okay, so really eclipsing the non-farm payroll announcement has been the OPEC decision. So we have seen here an agreement now which is in place, and actually I'll go through the live news items as they broke down today step by step in terms of the opportunities which this has presented. Okay, so essentially this afternoon we had OPEC sources announcing a deal with non-OPEC, agreeing to 400,000 barrels per day cut for non-OPEC from January for 6 months. OPEC and non-OPEC have agreed to a 1.2 million barrels per day total output cut, and they're to sign an agreement now. So we had that earlier on in the session. We have seen oil prices surging by over 5% as OPEC has agreed to an output cut. And that has provided a reasonable trade opportunity. In fact, just prior to the webinar, we've up 170 points on our long position on oil. So at the moment, we're seeing some reasonable move to the upside. This time of year, from a seasonal point of view, does tend to also be quite supportive for oil prices as well. So immediately following on from the OPEC announcement, oil prices have jumped up more than 5% following on from that, as the Middle East producers in OPEC agreed to reduce output to drain global fuel inventories and support the market. So certainly from that point of view, we've seen a big shift here. And oil, of course, has been in a downward trend, and we've seen 7 consecutive weeks of lower lows, lower highs, and also lower closes. But now we're at a point here where we could see certainly a turnaround in the market. So with that, let's just move over to some of the other headline news items as well. So we've also had the news here regarding the FX markets that we've had a weaker than expected non-farm payrolls today, and the dollar has been weak as a result of jobs reports which have been a disappointment. So the dollar weakened against major currencies on Friday after data showed US employers hired fewer workers than forecast in November, backing the view that US growth is moderating and the Federal Reserve may stop raising rates sooner than previously thought. So with that, it's now providing a backdrop to a positive move for the US dollar and, positive move for gold and silver and a negative move to the US dollar. It does put the Federal Reserve potentially on the back foot here for increasing interest rate hikes more aggressively as we go into 2019. So the US dollar, we're seeing some pressure to the downside this afternoon, immediately following on from the data. That's also putting pressure on US dollar, Canadian dollar, which you would also expect to sell off inversely to the move that we're seeing on oil at the moment as well. So as we're seeing oil surge to the upside, you would expect the Canadian dollar to also jump, as we've seen here, both on jobs data, but also being boosted by the rally in oil at the moment. So we're seeing that have impact to the upside on the Canadian dollar, which is putting pressure to the downside on the US dollar CAD, which we're shorting at the moment. So the overall anticipation this afternoon is that we could see some more US dollar weakness. Gold broke out to 5-month highs. Oil at the moment is up about 5% on the day. And we're also seeing some weakness here come into the US dollar overall, following on from non-farm payrolls. So with that, we'll move over to the charts. I'll talk you through exactly what we're looking at the moment. So first of all, if we have a look at US oil here, we're currently trading just under 54 US dollars per barrel. So we're holding around that zone right now. So we're long at the moment from $52.45 per barrel. We're up approximately about 150 points on this move at the moment. I do see the potential in the coming weeks here, because we're at such a significant point for oil, and I'll show you this if we go over to the weekly chart, for a rebound in price. We have effectively had here 7 weeks of consecutive lower lows and lower highs here for crude oil, culminating in a reversal which happened last week. And of course, this week, everybody has been waiting on the OPEC announcement to see whether OPEC would cut oil output. They really needed to do over 1 million barrels per day. They've gone ahead with an output cut of 1.4 million barrels per day, which essentially is more than was originally anticipated. And with that, that is providing a bolster here for oil prices. Remember again that oil has been consecutively selling off here over the last 7 weeks or so, every single week, lower lows and lower highs. So we're certainly seeing a bit of a reprieve from that downward trend. We're finding support at that very important level, which is just around $52.50 per barrel. And from here, we're really springboarding higher at the moment from a major weekly trend channel on the chart as well. So you can see at the moment, this is the third bounce. We bounce off that level going back to mid-July, then going back to August of 2017. And then more recently, we bounced off the lower trend channel over the last week as well. So at the moment, we're springboarding from that supportive zone. We found support at 50 US dollars per barrel this week. We're just sitting under 54 US dollars per barrel at the moment. There are other ways you could look at trading this opportunity, but my feeling is at this point that if we break above the weekly highs here, we could get some reasonable follow through. First of all, we should get a move back towards 55 US dollars per barrel, which meets the monthly pivot. At the moment, we're finding some resistance just at the 21-day moving average. If we can break above some of this resistance here, and we'll get the commitment of traders data later on today, and also the oil rig count too, if we do break above a lot of that overhead resistance, then we could shoot up towards 55 US dollars per barrel. And of course, above that zone, we could then make a move back towards 58 to 59 US dollars per barrel within the coming weeks here. So from a seasonal point of view, oil usually does pick up momentum over the month of December. This marries up with what we would normally anticipate at this time of year. My first target at the moment, we're approximately up 150 points on the trade, would be a move back towards $55 per barrel. If we break above the 21-day moving average and these recent swing highs, then if we can get a break back above 55 to 56 US dollars per barrel, I would then be looking for some follow through in the coming weeks back towards 57, 58 and just above those zones. It might be that the move is done for today, but often quite a lot of the move can happen later on in the session, particularly going into the weekend. I would watch out to see whether we can get a further breakout later on. Normally on previous oil announcements, oil can move anywhere between 300 to 400 points on the day of the announcement. If you look at how much we've moved already from the lows here, we've moved about 350 points. Which is actually in line with what you would normally anticipate with an OPEC announcement. But then, of course, we've got the weekend going into next week where we could see further upside as traders start to reposition. Particularly, we'll get the commitment of traders data out later on today, which will be just after 8 o'clock London time. And then we've also got the Baker Hughes oil rig count coming out later on today as well. So we'll be having a look at that data too to see whether there's been an increase or a reduction in the amount of oil rigs. Now, the other trade opportunity that I see as a result of this is also selling short into the US dollar, Canadian dollar. So we've got that inverse correlation, which we went through in detail yesterday, where if oil was to surge to the upside, you would naturally expect pressure to the downside on the US dollar, Canadian dollar. That is the inverse correlation. So we're seeing quite a reasonable sell-off at the moment with the US dollar CAD. If we break below the lower end of the trend channel, if we close below it, break below the monthly pivot, that is where we could accelerate to the downside and see quite a lot of follow through price action. And that's exactly what I'll be looking out for later on in the session and as we go into next week as well, if we continue this momentum lower. So certainly for today, I do think that US oil is going to be in play probably right until the end of the session. We're hovering just below 54 US dollars per barrel at the moment. I would also, in terms of other trade opportunities I'm looking at right now, the euro, we do have a buy signal on. Obviously, the US dollar has come under some pressure here. We have a sell signal on the US dollar as a result of today's non-farm payroll. So if we get a break through the lower end of the trend channel here and we see some follow through to the downside, that could certainly put more pressure on the US dollar and could lead to more upside, for example, to the euro, which we're looking at for a long position at the moment, where you can see we've got a buy signal on the euro and potentially we'll get more upside on that as we go into next week. We'll await more comments from the Fed as well as we go into next week too, given the fact that the non-farm payrolls has been a miss today, which would provide more pressure to the dollar and put the Federal Reserve on the back foot with regard to more aggressive interest rate hikes as we go into next year. So we just have a scan through some of the other markets we would look at here as well. Gold today is going to be very important. So gold is breaking today back above the 200-day moving average. Now, we've had this complete downward trend within gold since we broke below that level going back to May of this year. We broke below the 200-day moving average, closed below that zone, and since then we've continued to accelerate to the downside until we bottomed out in mid-August on peak trade war tensions. So where we are at the moment, quite an important level for gold, breaking, closing back above the 200-day moving average. Currently gold is sitting at 1,245 US dollars per ounce. If you look at gold on the weekly chart, we have this neckline which has been building for a while, where we've essentially got the third touch of that neckline. We look like we're on the verge of breaking out as we go into next week. My ultimate upside target for gold during the course of the January effect, which is often where we see a lot of upside with gold as we go in towards the end of December, as we lead into January, would be 1,200 and approximately 95 US dollars. If we were to follow through from here, which would be a 50-point move or a $50 move or a 500-point move from here as we transition between now, the end of the year, and go towards the end of January. So about a 6-week potential upside here, but it is dependent on whether we do break and close above the 200-day moving average. Normally, this sort of a trade opportunity occurs a bit later. It occurs after the interest rate hike on Wednesday, the 19th of December, is normally where we actually get the confirmation for that trade and we look to take advantage of that move. But it might be this year we're actually getting that confirmation earlier as a result of comments from Jerome Powell recently that the Fed are more dovish and potentially not going to be as aggressive next year on interest rate hikes, and that could actually propel gold higher from these zones. We still remain long with our silver trade. We've discussed this quite a few times previously. We're looking for a recovery here with silver, where silver at the moment is down approximately 16 to 17% so far in 2018. From where the prices started at the beginning of the year. So we've certainly had a significant sell-off over the course of 2018, which is leading into a bit of a recovery at the moment, where we're trading right now back towards the upper end of the recent resistance zone. So we're trading at $14 or above $14.50 per ounce here. I am looking at more upside for silver here as we progress throughout December and certainly into January as well for recovery here. You might also want to put platinum on your radar as well. So platinum at the moment is residing right to the lower end of the Keltner channels. It's more oversold than gold and silver. If we do build up momentum next week, if we break back above the highs here, certainly from today, and as we go into next week, if we break above the Friday's highs on Monday or Tuesday, we could start to see more follow through, especially once we start to build above some of this momentum, where if we get a move back above 800 US dollars per ounce. For me, platinum is lagging behind gold and silver at the moment. It tends to be one of the best movers going into January and February. I would look out for a potential trade opportunity here on platinum as we progress into next week and as we get closer to the FOMC statement in mid-December as well. But of course, we'll go through that on Monday's Commodities Corner as well, and we'll keep you updated on what we're looking to do there too. So the euro US dollar, for me, we've got a buy setup which is developing. We remain long oil. I think if we can break above a lot of this resistance here, break above the weekly highs, oil could certainly make a move back towards the 55 US dollar per barrel level, either by the close today or as we go into next week. Overall sentiment and momentum is fairly bullish at the moment for oil. We have a bullish engulfing candle on the daily chart. We have a buy signal, and also on the weekly chart as well, we're getting this momentum with the third bounce right off the lower end of the trend channel. So that's what we're looking at with respect to oil at the moment, and the major support which is coming in right now from the lower end of the trend channel here. Other trade ideas that I quite like at the moment are the euro New Zealand dollar. The anticipation is at this time of year, the euro should be stronger than the New Zealand dollar from a seasonal point of view. The euro is picking up momentum at the moment, and I see certainly if you compare this to the move that we've seen with the euro Australian dollar lately, which has had quite a sizable recovery of late. We've seen quite a significant move to the upside here for the euro Australian dollar. I'll just show you on the chart, and we're actually climbing back above the 200-day moving average just today. So the euro Australian dollar, I think so far it's moved over 300 pips this week. Yeah, it has. About 350 pip move from where it started at the beginning of the week when it gapped down on the open. So the euro New Zealand dollar, I would look at for, you've got a V-shaped reversal pattern occurring on this market. I would look at the potential for more follow through on this as well. If we break above the neckline as we go into next week, in fact, that will definitely be on the watch list on Monday when we go through the markets. New Zealand dollar is showing signs of normal seasonality here. We've got a sell signal on the New Zealand dollar, US dollar potential. I'm not going to enter into it today because of the potential for reversals later on in the session, but I will look at that on Monday, Sunday through to Monday, for a potential short opportunity on the New Zealand dollar, US dollar. As you would anticipate, and actually we discussed this yesterday on the webinar, if oil was to break out to the upside because of the vulnerability with the Australian dollar and the inverse correlation with the US dollar CAD, Australian dollar, Canadian dollar could actually end up being a really solid trade opportunity for a sell short here. So we've got that at the moment. We've seen this breakdown below the lower end of the trend channel, and we've revisited support here right around the 200-day moving average, sitting at the weekly pivot, and the monthly pivot as well is where we're finding support at the moment for the Australian dollar, Canadian dollar. And then just moving over to other setups that we're looking at right now, we've got the New Zealand dollar, Swiss franc, which is looking quite vulnerable at the moment. Looks like we should get more downside. Basically, a lot of the New Zealand dollar crosses, they look weak now going into the following week, although more preference to get into new trades on those as we get into Sunday through to Monday, just because of the potential for some reversals later on in the session today. But I still like oil going into next week at the moment, and still remaining long silver here as well. I also quite like the euro US dollar for more upside, and going to remain with the sell short for the time being on the US dollar Canadian dollar as well, which of course, if oil continues this breakout, we could certainly see more downside here as well on the US dollar CAD. And also just have the New Zealand dollar Japanese yen on the radar. That looks quite vulnerable too as we go into next week. Overall, I'm expecting more New Zealand dollar weakness, and that can be traded either via selling short the New Zealand dollar, US dollar, going long euro, New Zealand dollar, going for a sell short on the New Zealand dollar, Swiss franc, or a sell short on the New Zealand dollar, Japanese yen. So really, those are some of the top trade ideas that we're looking at the moment. It's been quite a historic day today in terms of the OPEC meeting. These trade opportunities don't come about that often. It's about once a year that we really get this major meeting, which occurs at the end of the year with OPEC, which gives rise to decent trade opportunities. So I would keep an eye on oil right into the close of the session today. And we've also got the Commodities Corner session on Monday as well. But overall, the non-farm payrolls today, it has not been a strong number. That will likely cause more downside, or certainly some pressure on the US dollar. Gold is looking quite strong here, right to the upper end of the range, closed back above the 200-day moving average. I would look at platinum for a potential long opportunity right off the lower end of the Keltner channels as well. And I would also just keep an eye on the New Zealand dollar, US dollar as well for some weakness at the moment. It does look a bit vulnerable to more downside as we go into next week as well. So I hope that helps just in terms of some of our positioning at the moment. And I'll tell you what we'll do actually. We'll just have a quick scan through and we'll see if anything else is just standing out at the moment. So again, Euro, New Zealand dollar, we've got a buy signal on at the moment. New Zealand dollar, US dollar, we have a sell signal. Australian dollar, Canadian dollar, we have a sell signal, although I believe that's completed now. New Zealand dollar, Swiss franc, we have a sell signal. Oil, we have a buy signal. Platinum, the start of a buy signal, but that will be more likely confirmed next week. Gold, we have a buy signal, but it's a bit overdone on the day. But if it closes above the 200-day moving average today, could have more upside next week. I do like the euro, to be fair. The euro is another trade I may consider today before the close because of the potential for more upside here. It's looking pretty strong at the moment, especially if the US dollar continues this momentum lower. So just put the euro on your watch list. I'm still long silver, remaining short US dollar CAD. New Zealand dollar, Japanese yen, I have a sell signal on. S&P 500, no, it filled that gap today, but now it's reversing from the gap fill. Australian dollar still looks under pressure here, as you would expect at this time of year. From a seasonal point of view, normally it does come under pressure around this time of year, so we could expect the potential for more downside. US dollar, yeah, Swiss franc still looks weak at the moment. Pound New Zealand dollar could be a good mover next week, depending on the outcome of some of the Brexit negotiations. Yeah, Australian dollar, Japanese yen still under pressure. Same with the US dollar, Japanese yen. Australian dollar, Swiss franc, I think that's corrected the move for today. Hit the weekly pivot. Yeah, the pound I won't touch for now. Actually, New Zealand dollar CAD could be good next week as well. If we see more upside on oil, that could be in play. Euro CAD also selling off in combination with some of the CAD crosses at the moment. And the pound Australian dollar looking reasonably strong at the moment. So as you can see, guys, there's quite a few trade opportunities going into next week. We'll revisit these on Monday's Commodities Corner, but hopefully that gives you an idea of some of our positioning as we get closer to the weekend here as well. Bear in mind, we've got the commitment of traders data coming out later on today. And we, of course, also have the oil rig count coming out later on as well. Again, if you'd like to make sure that you are kept updated with all of the latest developments in the markets, you can very simply just go across to our YouTube channel and subscribe to our YouTube channel so you are kept updated with all of the latest developments in the markets, and that way you won't miss out on any of the commodity reports. But if you want to be kept updated real time and join a community of successful traders at the Gold and Silver Club, get access to live trade alerts. Those are delivered via WhatsApp, email and SMS. Have access to mentorship, expert advice and in-depth market analysis and trusted insights so you can know earlier how to act quicker and maximize your return on each trade opportunity. The link to make an application to join us at the Gold and Silver Club is www.jointhelivetradingroom.com. The link is also below the reports, our YouTube reports as well. So make sure you subscribe to our YouTube channel. We'll be putting out a fresh report tomorrow. But if you'd like to actually join us on the live trading rooms, get access to all of our services, the link is www.jointhelivetradingroom.com. Okay, so with that, that's a bit of a wrap up in terms of the post non-farm payroll moves, what we're seeing after OPEC as well. I wish you all good trading. Have a fantastic weekend. We'll catch you back here on Monday for the Commodities Corner. Thanks again to Charisse and the team at binary.com. And I wish you all good trading. Okay, guys, so bye for now, and we'll see you on the next one. Thanks, everyone. Take care. Bye-bye.